Welcome to Invest Synopsis. Today, we're diving into the world of real estate investing with a comprehensive overview of Ken McElroy's widely acclaimed book, The ABCs of Real Estate Investing. Real estate has long been regarded as one of the most tangible and lucrative investment opportunities. In this book, Ken McElroy, a seasoned real estate investor and best-selling author, shares invaluable insights and strategies that can empower both novice and experienced investors alike to thrive in the dynamic realm of real estate. McElroy breaks down complex concepts into simple, digestible ABCs, from understanding the fundamentals of real estate investing to mastering the art of creating wealth through strategic property acquisitions. His expertise shines through as he explores various investment strategies, such as identifying lucrative properties, negotiating deals, financing, managing properties effectively, and ultimately, achieving sustainable success in the real estate market. Whether you're an aspiring investor seeking a solid foundation or a seasoned pro aiming to refine your tactics, this book serves as a comprehensive guide, offering practical advice and real-world examples to navigate the nuances of real estate investing. Join me as we unravel the key principles, tips, and strategies outlined by Ken McElroy in The ABCs of Real Estate Investing, empowering you to embark on a rewarding journey towards financial success and wealth through real estate. Success in real estate, like any other field, seems to gravitate towards certain individuals who effortlessly navigate the industry. These are the real estate tycoons who make success appear effortless, capitalizing on opportunities and displaying unwavering confidence and acumen. However, their achievements aren't the result of mere luck or magic. They're born out of dedication and action. Around 15 years ago, the author, Ken McElroy, made a deliberate choice to become one of these successful figures in real estate. He didn't wait for serendipity or a stroke of luck. Instead, he opted for property management as his path to financial independence. Through sheer determination and a relentless pursuit of his goals, he embarked on his journey. In the early stages of his real estate endeavors, McElroy encountered numerous challenges, made mistakes, but most importantly, he learned from each setback. For every mistake, he gained 10 valuable lessons, gradually understanding patterns, creating systems, and cultivating a reliable network of contacts. His progress was not instantaneous, but as he persisted, opportunities started presenting themselves more frequently. McElroy acknowledges that while luck and magic might seem part of success, they stem from hard work and preparedness. He contrasts individuals attending Rich Dad seminars, some displaying the drive and determination necessary for success, while others lack the commitment or technical skills needed for business triumphs. Understanding the struggles faced by aspiring real estate investors, McElroy penned this book as a guide. It's not a shortcut to quick wealth or a motivational piece. Instead, it's a repository of proven strategies, aiming to demystify real estate investing, offering insights, and shortening the learning curve for those aspiring to achieve financial freedom through property investments. Before delving into the specifics of finding, purchasing, and managing investment properties, McElroy addresses prevalent myths that can hinder progress. He encourages readers to discard these misconceptions up front, allowing individuals to rid themselves of limiting beliefs that might be obstructing their path to success. This summary captures the essence of the passage, highlighting McElroy's personal journey into real estate investing and his motivation for writing the book to help aspiring investors navigate the complexities of the field. In Ken McElroy's The ABCs of Real Estate Investing, one of the prevailing myths he dispels is the misconception that one needs substantial wealth to venture into real estate investments. The common belief that hefty savings or an already established fortune are prerequisites for entering the real estate market couldn't be further from the truth. McElroy, drawing from personal experience, emphasizes that all it takes is a well-calculated real estate deal with profit potential and solid financials to kickstart your investment journey. McElroy shares his initial foray into real estate, recounting his first investment, a furnished condo rented out as part of a weekend getaway program. Despite the purchase price of $116,000, he managed to secure the property with a $20,000 down payment. This illustrates that while some initial capital is necessary, it doesn't require a vast sum to initiate a real estate investment. Contrasting this modest beginning is McElroy's later acquisition of a 182-unit apartment complex in Sun City, Arizona, costing a substantial $9 million. However, what stands out is his approach to funding this colossal investment. Instead of fronting a significant down payment himself, he raised $2 million from other investors, forming a partnership where he relinquished the majority of the ownership to those who lent the down payment. This demonstrates the power of leveraging other people's capital and forming strategic partnerships to enter larger real estate ventures without significant personal financial resources. McElroy stresses the importance of recognizing the value of partnerships in real estate investments. Partnerships allow for risk mitigation by enabling ownership in multiple properties rather than solely focusing on one. Moreover, he emphasizes that successful deals are what attract investors, and with each prosperous venture, it becomes progressively easier to secure funding and build trust among potential partners. The author highlights the significance of thoroughness in deal selection, ensuring financial viability and open communication with investors. McElroy's approach underscores the existence of a substantial pool of individuals seeking real estate investment opportunities, especially when compared to stagnating or declining investment alternatives like the stock market and bonds. Ultimately, McElroy's narrative dispels the myth that substantial personal wealth is a prerequisite for real estate investing. Through shrewd deal-making, leveraging partnerships, and showcasing successful ventures, he illuminates the path for aspiring investors, showing that lucrative real estate opportunities are within reach regardless of initial financial limitations. In Ken McElroy's book, The ABCs of Real Estate Investing, the author dispels the myth that starting with big real estate deals is too risky and emphasizes the possibilities and advantages of larger investments over smaller ones. He argues that while starting small is perfectly acceptable, there's a common misconception that big deals are inherently riskier. McElroy challenges the reader to reconsider the mindset that only smaller properties are feasible. He presents the idea that even substantial investments, like a $2 million 50-unit building, could be within reach. He points out that the financial feasibility of these larger deals doesn't necessarily require having the full amount of the investment in hand. Unlike smaller properties where mortgages are often secured through personal earning potential and wealth, larger investment property loans are secured by the asset itself. This distinction reduces the risk to the investor, as the larger property's valuation, not just personal wealth, backs the loan. To illustrate this concept, McElroy contrasts two of his own investments, a $116,000 condo and a $9 million project in which he owned a 10% share. Despite the condo being solely his responsibility from mortgage to management, the larger project with no out-of-pocket costs and professional management was less risky. This example emphasizes that having no cash invested in a property doesn't necessarily equate to higher risk. Moreover, it underscores the difference in risk exposure between sole ownership and shared ownership in a larger, professionally managed venture. The author's personal experience further demonstrates the potential gains of larger investments. He mentions selling the condo for a modest profit after 5 years, while his 10% ownership in a $9 million project yielded over $200,000 in less than a year due to its appreciation in value. McElroy attributes this success to buying and managing properties correctly, highlighting the power of making informed decisions and effective property management. McElroy delves into the differences between residential and commercial properties regarding appreciation and control. In residential properties like houses or condos, property appreciation relies heavily on the surrounding neighborhood's appreciation. Conversely, commercial properties like apartment buildings derive their appreciation from the property's cash flow. This distinction puts investors in control, as managing the property effectively can directly impact its value. Another aspect McElroy touches upon is occupancy risk. In smaller residential properties, such as single-family homes, when a unit is vacant, the investor bears the full burden of the mortgage. In contrast, larger properties, even an 8-unit building, provide more stability, as the loss of one tenant doesn't equate to a complete loss of income. The more residents a property has, the lower the exposure to vacancy-related financial risks. In essence, McElroy challenges the conventional wisdom that starting small in real estate is the safer route. He makes a compelling case for larger investments, emphasizing their potential advantages in terms of valuation, appreciation, control, and reduced risk through diversification and professional management. This perspective shift encourages aspiring investors to consider larger deals, highlighting the possibilities and benefits they can offer when approached with knowledge and prudence. In Ken McElroy's The ABCs of Real Estate Investing, a critical analysis of prevalent myths surrounding real estate investment dispels misconceptions and advocates for sustainable, long-term strategies. One prevalent myth is the belief that flipping properties, buying low and rapidly selling high, is the surefire path to wealth. While some may have experienced success with this method, McElroy likens it to day trading in the stock market, risky and not easily replicable. Another myth revolves around the notion of no money down deals, where properties are fully financed, leaving little to no capital for property improvement or repairs. McElroy elucidates that such deals often come with higher interest rates, elevated loan costs, and a reliance on property appreciation rather than enhancing its operational efficiency to generate cash flow. He emphasizes that relying solely on property appreciation while neglecting to improve cash flow is a precarious gamble, as market fluctuations and external factors significantly influence this model. McElroy's investment philosophy contrasts starkly with these myths. He firmly believes in the long-term acquisition and management of income-generating assets, particularly rental properties, as the primary avenue to build wealth. He highlights the value of buying and holding assets, leveraging cash flow to enhance property value, and steering clear of short-term, speculative approaches. Challenging the misconception that capital gains from selling one property are necessary to fund the acquisition of another, McElroy proposes an alternative approach. He advocates for finding sound investment opportunities and presenting these to potential investors, leveraging their support to secure down payments for subsequent properties, thereby rewarding them as the investments yield returns. Using his real-life example of a $13.8 million property that appraised for $16.3 million upon completion, McElroy elaborates on the pitfalls of immediate selling due to the tax implications. Instead, he recommends refinancing the property to access equity without triggering a taxable event. By refinancing and utilizing the pooled equity to repay investors, McElroy underscores the advantages of this approach, which provides ongoing ownership, continued rental income, and tax-free gains that can be reinvested into other ventures. Moreover, McElroy stresses the significance of buying properties strategically, making necessary improvements, and thereby enhancing their value over time. This long-term approach aligns with his belief that properties, if acquired and managed prudently, tend to appreciate, making them increasingly valuable assets. In essence, Ken McElroy's investment principles emphasize patience, strategic acquisition, and the prioritization of cash flow over speculative gains. His approach focuses on long-term ownership, continual property enhancement, and leveraging cash-out refinancing to generate tax-free gains for reinvestment, an approach that stands in stark contrast to the myths of quick flipping and no-money-down deals often glamorized in the real estate market. In Ken McElroy's The ABCs of Real Estate Investing, the author dismantles the myth surrounding successful real estate investors having an inherent Midas touch. He contends that successful individuals in the real estate industry aren't endowed with a magical ability. Rather, they possess a keen eye for spotting opportunities and know how to translate them into profitable ventures. The key lies in identifying and capitalizing on the potential of a property, understanding that different perspectives lead to diverse investment strategies and levels of success. McElroy illustrates this concept by envisioning a hypothetical 10-acre parcel of land surrounded by a significant retail presence and the presence of a large microchip manufacturer employing 1,000 people nearby. He highlights how various professionals, such as tract home builders, custom builders, commercial and residential developers, view the same piece of land differently based on their expertise and objectives. For instance, a tract home builder may envision 40 single-family homes, while a custom builder might see potential for 10 luxury estates. Conversely, a retail commercial developer may visualize a new shopping center with anchor retailers, specialty stores, and restaurants. A multifamily developer might consider a 150-unit apartment complex with amenities, and an office space specialist may see a 3-story office building. Each perspective brings forth a unique potential and level of profitability. The underlying principle here is the application of common sense. Successful investors, often perceived to have the Midas touch, base their decisions on practicality and common sense. In the example provided, McElroy argues that common sense dictates certain options as more viable based on factors like proximity to employment centers, existing market gaps, and surrounding retail presence. The crux of recognizing opportunities lies in common sense evaluation. McElroy emphasizes that aligning one's vision with practicality and consensus is crucial. If everyone fails to see the merit in a proposed idea for a property, it's essential to assess whether it's a revolutionary concept or simply a flawed idea that's being overlooked. More often than not, the latter tends to be the case. McElroy warns against the pitfalls of having to hard sell one's vision, indicating that if it's challenging to convince others, it might translate into difficulties selling the completed project. In essence, the Midas touch attributed to successful real estate investors is a product of shrewd decision-making rooted in common sense. Recognizing the most practical and viable investment opportunities amid diverse perspectives and potential is the true mark of success in real estate investing. This nuanced understanding and application of common sense differentiate profitable ventures from costly mistakes in the world of real estate. Understanding these principles laid out by McElroy can guide aspiring investors in approaching real estate opportunities with a rational mindset, steering them away from speculative ventures towards sound, well-grounded investments. In The ABCs of Real Estate Investing, Ken McElroy debunks the myth that one needs an abundance of confidence to succeed in real estate. He addresses the prevalent misconception that self-doubt often hampers individuals from pursuing their investment goals. McElroy identifies two conflicting voices within oneself: the voice of reason, representing logic and common sense, and the voice of self-doubt, stemming from past experiences and insecurities. McElroy's personal journey serves as a testament to overcoming self-doubt. He reflects on his upbringing in an average middle-class household, acknowledging the invaluable values instilled by his parents. Despite his father not being particularly entrepreneurial, McElroy credits his later success to encounters with mentors who introduced him to the world of entrepreneurship. Through this exposure, he fused the solid values acquired from his upbringing with a newfound entrepreneurial spirit, shaping his identity and paving the way for his career in real estate. The author emphasizes the significance of letting go of past negative influences, whether from unsupportive family members, critical peers, or discouraging teachers. McElroy recognizes that adversities are inevitable in everyone's life and believes that successful individuals rise above such challenges. Drawing from personal experience, he advocates for embracing one's past, learning from it, and leveraging both positive and negative experiences to build resilience and character, crucial traits in the realm of real estate investing. Real estate, according to McElroy, demands inner strength. He advises aspiring investors to not only seek strength from positive aspects of their lives, but also view hardships as character-building opportunities. Contrary to popular belief, McElroy contends that one can never possess too much character, emphasizing its pivotal role in navigating the complexities of the real estate business. In conclusion, McElroy's emphasis on overcoming self-doubt and building character sets the stage for the rest of his book, which is dedicated to guiding readers through the process of establishing and growing their property investment businesses. By sharing his own narrative and insights, McElroy encourages aspiring investors to embrace their past, draw strength from adversity, and embark on their journey in real estate investing with confidence and resilience. In Ken McElroy's The ABCs of Real Estate Investing, Myth 36 tackles the common misconception that aspiring real estate investors often face: the perception of not having enough time to embark on this lucrative venture. McElroy addresses the notion that time constraints can hinder individuals from pursuing what they truly want, emphasizing the difference between needs and wants in one's life. The crux of this myth revolves around choices and priorities. McElroy points out that while individuals always find time to fulfill essential tasks like going to work, maintaining their homes, or meeting daily responsibilities, they often struggle to dedicate time to pursue their true desires. Activities like learning a new language, engaging in hobbies, or contributing to the community are often relegated due to prioritizing immediate needs over long-term wants. Real estate investing, McElroy contends, falls into the category of something individuals should not only want but may also need to do for their financial well-being. Acknowledging that real estate investment involves dedicated effort and time, particularly in the initial phases, McElroy emphasizes the hands-on nature of the business. This entails activities like property scouting, deal negotiations, supervising repairs, and potentially managing the property post-acquisition. Despite the initial workload, McElroy passionately expresses his personal satisfaction and fulfillment derived from the real estate business. He admits falling into the trap of not having enough time himself, but attributes his eventual success in writing the book to a do-it-or-else deadline that spurred him to become disciplined and focused. The key takeaway is that merely wanting to pursue real estate investment may not be enough. Commitment, dedication, and a disciplined approach are imperative to make strides in this field. McElroy challenges the idea that lack of time is an absolute barrier to starting a real estate investment business. He encourages individuals to reflect on whether their hesitation stems from a genuine lack of time or from the disparity between wanting and needing to pursue this endeavor. For those already employed during weekdays, he suggests allocating weekends for property search and evaluation, making calls during free moments, and finding creative ways to pursue their dreams. Ultimately, McElroy highlights the importance of aligning one's aspirations with their true dreams. He emphasizes that if real estate investment truly aligns with an individual's goals and ambitions, there's always a way to make time and turn those dreams into reality. In essence, this myth busts the misconception that time scarcity is an insurmountable obstacle to enter the real estate investment arena. Instead, McElroy challenges aspiring investors to reassess their priorities, differentiate between needs and wants, and realize that with determination and strategic time management, pursuing one's dreams in the real estate industry is not only feasible, but also immensely rewarding. In Ken McElroy's The ABCs of Real Estate Investing, the author dispels the myth that one needs extensive connections or insider relationships to venture into the real estate industry successfully. He asserts that while having a network of key individuals like real estate agents, attorneys, or bankers can be advantageous and save time, it is not a prerequisite for starting in the real estate investment business. McElroy emphasizes that understanding the key people required in the real estate investment journey is crucial, and these individuals will be determined by the goals set by the investor. The people one knows presently may not necessarily align with the needs of their real estate investment team once their objectives are clearly defined. Therefore, he encourages aspiring investors to begin their journey without prior connections, as they will organically build relationships and gather knowledge along the way. The author shares a personal anecdote to illustrate this point. He recounts a deal his company pursued in Portland, Oregon, despite having no prior personal or professional contacts in the city. Despite the lack of existing connections, McElroy recognized the potential in the market due to certain indicators such as the city's location and high unemployment rates among property owners. This led them to believe that there were potential buying opportunities in the area. Despite the initial challenge of not knowing anyone in Portland, McElroy and his team decided to take proactive steps. They conducted thorough research on the city, its property managers, city officials, brokers, and other relevant parties before their trip. This preparation allowed them to schedule and conduct around 10 to 12 meetings within a span of 2 days during their visit to Portland. The meetings were strategic and aimed at establishing connections and gathering insights about the market. These interactions provided them with valuable information and enabled them to begin forming their team in the city. While the process required investing in lunches and dinners, the return on investment was the initial formation of their network in a new market. McElroy's story underlines the importance of proactivity, research, and networking in the real estate investment landscape. It emphasizes that while prior connections can be beneficial, they are not mandatory to kickstart a successful journey in real estate investing. By setting clear goals and taking initiative, investors can expand their network and gain valuable knowledge from industry professionals, ultimately building a robust team to support their investment endeavors. This narrative highlights the essence of being resourceful, adaptable, and open to learning from diverse sources in the pursuit of real estate investment success. It underscores the idea that one can start with minimal connections and gradually cultivate a network by actively engaging with industry stakeholders and leveraging available resources to create a solid foundation for investment endeavors. In Ken McElroy's book, The ABCs of Real Estate Investing, myth number 8 challenges the belief that one must be a seasoned negotiator or a highly experienced business person to succeed in real estate. McElroy debunks this notion by emphasizing that while prior experience can offer a level of comfort, true power and confidence in real estate investing stem from constructing solid, mutually beneficial deals rather than relying solely on past experiences. The book elucidates the process of identifying and evaluating properties, aiming to establish a realistic purchase price that maximizes monthly income and appreciates the asset. According to McElroy, a deal that aligns with these criteria becomes enticing to everyone involved. He emphasizes that negotiation skills are not always the decisive factor in deal-making. McElroy shares an illustrative example from his own experience involving a 205-unit building in Glendale, Arizona. Initially listed at $7.9 million, with multiple offers reaching $7.2 million, the seller declined all offers and withdrew the listing. 6 months later, the building was relisted at $8.1 million. McElroy's team had evaluated the property and deemed $7.2 million as a fair price based on its operational aspects. Despite the increased listing price, McElroy would have maintained his offer at $7.2 million if he were still interested. Surprisingly, the seller retained ownership of the property without accepting any of the offers based on operational assessments. The author highlights that the listing price is often arbitrary, driven by the seller's perception rather than the property's actual operational value. Negotiating solely based on this number can lead to a disastrous outcome. McElroy asserts that his negotiation meetings are more accurately presentation meetings where he presents the numbers, and deals are mostly take-it-or-leave-it propositions. In cases where the numbers don't align, walking away from the deal is seen as a positive action. In essence, McElroy advocates for investors to focus on understanding the property's operational aspects rather than getting fixated on the listing price. Building a deal based on solid operational evaluation forms the cornerstone of successful real estate transactions. The ability to present these numbers confidently and decisively allows investors to discern whether a deal is viable or not, ultimately leading to successful investments. McElroy's insights challenge the conventional belief that negotiation prowess and extensive business acumen are prerequisites for real estate success. Instead, he advocates for a strategic focus on property evaluation, ensuring that investors enter into deals that align with their financial objectives and operational assessments. This approach empowers investors to make informed decisions, avoid overpaying for properties, and secure deals that generate sustainable income and asset appreciation. The book emphasizes that the real power in real estate investing lies not in negotiation skills, but in the ability to evaluate properties accurately, present compelling numbers, and have the confidence to walk away from deals that don't meet the desired criteria. This perspective reshapes the paradigm of real estate investing, offering a pragmatic approach that prioritizes sound evaluation over solely relying on negotiation prowess. In Ken McElroy's book, The ABCs of Real Estate Investing, Myth number 9 challenges the misconception that one must possess an extensive knowledge of real estate to succeed in the field. This myth often discourages aspiring investors, leading them to believe they need expert-level proficiency before they even begin. McElroy debunks this myth by emphasizing that success is a journey, not an immediate destination. He illustrates how all successful individuals, regardless of their field, start from the same point, the beginning. The narrative emphasizes the importance of taking the first step, which initiates the learning process. McElroy contends that expertise is gained through experience and continuous effort. Reading his book provides a solid foundation for beginners, offering a framework to commence their real estate journey. However, the real learning begins with practical engagement, particularly through the execution of real deals. McElroy stresses the significance of learning by doing. While the book equips readers with knowledge useful for social conversations or casual gatherings, the real education comes from first-hand experiences in real estate deals. Each venture presents a unique set of challenges and learning opportunities. For instance, McElroy recounts an unexpected experience involving buildings in Portland constructed on a 70-year-old wooden pier from the 1930s. This situation demanded an understanding of the pier's structural integrity before purchasing the property, prompting McElroy to delve into unfamiliar territory. Despite living in a desert environment, he navigated hiring divers, a boat, and structural engineers to inspect the pier, highlighting the continuous learning curve in real estate. The author's own encounters demonstrate that venturing into real estate invariably leads to unexpected situations. He asserts that true proficiency in real estate only emerges through active involvement in the field. Engaging in deals allows individuals to immerse themselves in their local market, recognize patterns, discern trends, and confront unforeseen challenges, such as the discovery of 70-year-old wooden piers. McElroy emphasizes that these unexpected challenges and learning experiences keep real estate investing fascinating. Through such encounters, investors gain practical knowledge, enabling them to share authentic experiences at social events, far surpassing mere book knowledge. Ultimately, the author's message advocates for initiating action, engaging in real estate endeavors, and embracing the learning process as the most effective way to gain expertise and succeed in the field. In essence, McElroy's message revolves around the idea that genuine knowledge and mastery in real estate investment arise not from theoretical learning alone, but from practical engagement and continuous learning through real-life experiences in the field. Ken McElroy asserts that claiming not to fear failure is, in essence, dishonest. He boldly states that everyone experiences a fear of failure at some point. However, the key difference lies in how individuals respond to this fear. While some let this fear hinder their progress or prevent them from starting altogether, others use it as a motivator to push forward. The author emphasizes the importance of initiating action despite this fear. Taking small steps, making one call at a time, or examining one property after another might seem insignificant, but these actions lead to progress. He cautions against fixating on the end result and instead advocates focusing on the manageable steps in between. Often the fear of failure arises when it's time to make decisions, particularly in real estate investment. McElroy terms this phenomenon as analysis paralysis, where individuals excessively analyze an opportunity but struggle to commit to it. He suggests that his book serves as a guide for people facing this fear, providing them with the tools necessary to analyze investment properties. Once the numbers align, further analysis becomes unnecessary, eliminating the need to stay frozen in fear. Another manifestation of the fear of failure is through regret. After making a decision and encountering inevitable challenges, individuals might regret their choice instead of strategizing on overcoming hurdles. This fear-induced regret can potentially turn a promising investment into a detrimental one. McElroy shares his personal approach to decision-making without regret. He views each decision as a starting point and focuses on progress rather than dwelling on past choices. Reflecting on his early days as an investor, he admits experiencing acute fear of failure. However, he recognized that remaining paralyzed by fear would ultimately lead to failure. Choosing to take steps forward, even if incremental, increased his chances of success. The author underscores the importance of leveraging the fear of failure as a motivator rather than allowing it to become a self-fulfilling prophecy. By utilizing this fear to drive action and propel progress, individuals can avoid stagnation and achieve their goals. This excerpt from Ken McElroy's book emphasizes the ubiquitous nature of the fear of failure in real estate investment and entrepreneurship and provides strategies to confront and overcome it to achieve success in the industry. In Ken McElroy's The ABCs of Real Estate Investing, the myth that you have to know the tricks of the trade is debunked, emphasizing the absence of magical shortcuts, but instead highlighting essential keys to success. McElroy underscores three fundamental secrets crucial for achieving success in any field. Myth: you have to know the tricks of the trade. McElroy challenges the concept of tricks of the trade, asserting that true success doesn't hinge on elusive secrets. Instead, he emphasizes three vital principles. 1. Setting goals, the foundation for success. The cornerstone of success lies in setting clear, achievable goals. Goals not only provide direction but also serve as milestones for measuring progress. McElroy stresses the importance of establishing goals as the foundation for a roadmap toward success. The upcoming chapter is dedicated to goal setting, elucidating its significance in guiding and motivating individuals along their investment journey. 2. Perseverance, overcoming challenges. Perseverance stands as a critical factor in achieving success. McElroy shares personal experiences, highlighting the inevitability of encountering obstacles in the investment journey. He emphasizes that giving up when facing adversity doesn't breed winners. Over his 15-year career, McElroy encountered numerous challenges, including financing setbacks, employee issues, and challenging tenants. However, he reiterates that success stems from confronting difficulties head-on, emerging stronger and better equipped to tackle future challenges. 3. Understanding the process, the key to mastery. Understanding the intricacies of the investment process is pivotal. McElroy reassures readers that the book will serve as a comprehensive guide, drawing from his extensive 15 years of experience in real estate investing. The book promises to encompass every aspect of the journey, from goal setting and team building to property identification, evaluation, determining purchase prices, and efficient property management. McElroy aims to equip readers with a wealth of knowledge accumulated through his years of practical experience, intending for the book to become a go-to manual for success in real estate investing. Conclusion: Ken McElroy's debunking of the myth of tricks of the trade in real estate investing lays the foundation for a more practical and realistic approach to success. By highlighting the importance of setting goals, persevering through challenges, and understanding the investment process, McElroy provides a roadmap for aspiring investors. The promise of the book is to impart invaluable knowledge and expertise garnered over 15 years, empowering readers to navigate the intricate world of real estate investing with confidence and skill. I hope you're finding our journey through Ken McElroy's The ABCs of Real Estate Investing insightful and beneficial for your own investment aspirations. But before we dive into the upcoming Part 2, I wanted to take a moment to express my gratitude for all the incredible support you've shown us. Your comments, likes, and shares truly mean the world and motivate us to keep creating valuable content. Real estate investing is an expansive world, and in Part 1 we've covered some fundamental principles McElroy discusses: setting goals, persevering through challenges, and understanding the investment process. However, there's so much more to explore. Here's where I need your help. Your feedback drives the content we create. If you have specific topics or questions about real estate investing, or want us to delve deeper into certain aspects discussed in McElroy's book, drop your thoughts in the comments below. Your input will shape the content of our upcoming Part 2 video. And guess what? Part 2 is on the horizon. We'll be delving deeper into McElroy's invaluable insights, unveiling more strategies, and providing further guidance to elevate your understanding of real estate investing. Stay tuned and hit that notification bell so you don't miss out. Make sure you're subscribed to Invest Synopsis to catch the release of Part 2. Trust me, you won't want to miss it. Thank you once again for being an incredible part of our community. Your support fuels our passion for sharing knowledge and empowering each other on our investment journeys. Let's make Part 2 even more enriching and engaging together. See you soon in the next video.